Obviously, TikTok is the exit of the month, but there's just so many things in the docket coming up here. So I think the first one we have to talk about is Airbnb, which again, talking
Yes.
about bankers throwing rumors around, we have more rumors. Isn't that right, Alex?
I mean, we do have more rumors, leaks, or however you want to kind of qualify this. Airbnb, the IPO could be back on, which is pretty big news for the year. It also could file as early as this month, which is super, super exciting. Bloomberg had this story. I'm pretty hype about it. The question then really quickly became, how can Airbnb possibly be ready to go public when we knew they were in kind of a financial crater a couple of months ago? And I have a hypothesis about this that I want to bounce off you guys. So have you seen what's happened to like the ride sharing companies in the last couple of months on the public markets? I
No.
need to stop asking stock market questions on this show because the answer is always no, we haven't seen it. Um, but
I know
alluding
ride sharing is still massively down in most major cities.
that's
In
close
fact, I
enough.
believe we talked about that last week. It's still
Yes,
down like what, 85%, but Eats is making up. So I remember some things.
okay. The point is, Lyft reported its earnings this week, and they showed that they had a really bad Q2. But what they also said was, we saw rebounding ride volume, and people were excited about the recovery story more so than they were worried about the trailing results. And so I wonder if Airbnb is saying, look, Q2 garbage, but if you look at June and then July, then August maybe, you can see this relatively respectable return to form, and that's going to be the momentum on which they go public. So maybe it makes more sense than I thought.
Well, I think the Airbnb actually released some numbers for nights booked later in the second quarter, which actually showed that they were roughly in line with results from last year, which in some ways isn't surprising because I've had so many friends get Airbnbs in which are doing multi-month rents. And so if you move from a tourism world in which you have like 2-3 nights to a world in which people are doing 90 days in a row, no cleaning fees, no turnover, it
Right.
actually might not be as bad as most people think.
There was that Bloomberg story 2 days ago or yesterday, where it showed the quarterly revenue dropping 67%. But I'm much more on what you're saying, Danny, which is like probably like the trick up their sleeves. Travel is coming back. We've been hearing that it's going to come back in some way that we just don't recognize it yet. And Brian Chesky had this good quote in the New York Times where he was like, it's the second founding of Airbnb. It's going to be long-term rentals. It's going to be months. And, it's definitely optimistic, but yeah, just like grounding it to what I'm seeing from people and friends, that looks like instead of signing a new lease, it's an Airbnb now.
Well, I will say that sounds very similar to the second coming of Christ, which seems a little. But I will say
Too soon, always.
This is a reminder. It is too soon. We've been waiting a long time, but we'll probably wait
2,000
even
years,
longer.
actually.
But I will say that it's a reminder that marketplaces work. Ultimately, the inventory is here. The customers are here. Airbnb didn't just lose its brand equity. It didn't just lose, the centrifugal forces that come with being a marketplace play. And so while the marketplace may have less transaction volume today or earlier in the quarter, going forward, I imagine it's going to do very, very well. There's still no real competitors in that market.
So absolutely on that. And just to throw the numbers out there so people listening have them, Q1 Airbnb revenue, $842 million. Q1's a little bit slow for them compared to other quarters that are seasonally a little bit stronger. Adjusted loss of $341 million in Q1. GAAP loss is certainly larger than that. Q2, this is where it gets kind of rough. Only $335 million in revenue, which is much less than $842 million on a sequential basis. And then adjusted loss of $400 million, which I presume strips out the cost of laying off, I think it was 1,900 people. And then as one tiny little note on this before we move on to Palantir, because oh my, Lyft and Uber are talking again about profitability and their promises about going profitable. Kirsten and I have a piece going up about this really soon. And Lyft said because of all their layoffs and cost cutting, they can actually get to adjusted profitability more quickly at a lower ride volume. So maybe Airbnb actually looks better financially now that it has fewer people working at it, which is a sad thing to say, but talking about finances, not humans. So